What if you could invest in the top performing stocks right now? Would you take the chance? Is momentum investing the key to unlocking higher returns in your portfolio or just another hype? Will investing in the Motilal Oswal Nifty 500 Momentum 50 Index Fund be the key to unlocking the greatest potential in your investment portfolio? Let us find out the answers to these questions through the in-depth analysis in this video. Hi. Welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing whether investing in this fund will be suitable to your investment portfolio or not, let us first understand a few basic details about this fund. So as an NFO, it opens on 4th September 2024 and closes on 18 September 2024. And some of its key features are it is an open-ended fund type which belongs to the category of equity flexi-cap fund, and it has Nifty 500 Momentum 50 TRI as its benchmark index. And there is no entry load, but still there is an exit load of 1% for redemption within 315 days. And the minimum investment you need to start investing in this fund is just 500 rupees. And the fund managers for this fund are Mr. Swapnil P. Mayekar and Mr. Rakesh Shetty. And according to the riskometer, the risk involved in this fund is very high. So these are some of the key features of this fund. Now let's take a look at the investment objective of this fund. So the primary investment objective of this fund is to provide returns that before expenses closely correspond to the total returns of the securities as represented by the underlying index, which can be subjected to tracking error as this is an index fund. So speaking about index, let us first understand the index it has as its benchmark, which is the Nifty 500 Momentum 50 Index. So let's understand a few basic details about this index. So the Nifty 500 Momentum 50 Index aims to track the performance of the top 50 companies within the Nifty 500 selected based on their normalized momentum score. This momentum score for each company is determined based on its 6-month and 12-month price return, which is adjusted for volatility. So the stock weights are based on a combination of the stock's normalized momentum score and its free float market capitalization. And this index can also be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs, and other structured products. Now let's take a look at the sectors represented under this index. So the sectors represented are capital goods, financial services, automobile and auto components, power, consumer services, consumer durables, construction, metals and mining, oil, gas and consumable fuels, realty, healthcare and chemicals. So the highest weightage is given to the capital goods sector by a weightage of 31.20%, while the lowest weightage is given to the chemical sector with a weightage of 1.11%. And now let us see the top 10 holdings under this index. So the top 10 companies under this index are the Trent Limited, Bajaj Auto Limited, Adani Ports and Special Economic Zone Limited, Bharat Electronics Limited, Mahindra and Mahindra Limited, REC Limited, Siemens Limited, Hindustan Aeronautics Limited, Power Finance Corporation Limited, Tata Power Co Limited. And the highest weightage is given to the Trent Limited by the first position, which is the weightage of 6.43%. Top 10th position is given to the Tata Power Co Limited by a weightage of 3.51%. And now if you take a look at the index returns as on August 30 and 2024, you can see from the data graph that it has performed significantly better in the long run compared to the short term. Now as we have understood the basic details about this NFO as well as the index it is representing, let us now take a look at the advantages and disadvantages of this fund to better analyze whether investing in this will be worth it or not. So let's first take a look at the advantages of the fund. So one of the major advantage is the momentum based strategy. So this fund capitalizes on a momentum based strategy, which means it invests in stocks that have shown positive price trends. Historically, momentum investing has outperformed in certain market conditions. Another advantage is a diversified exposure. With a focus on the top momentum driven stocks across the Nifty 500, you're getting a diversified portfolio spread across various sectors. There is also another advantage called rule-based and passive management. So since it is an index fund, it's passively managed, which generally means lower expense ratio compared to actively managed funds. Also, the rules-based approach removes human biases from the stock selection. And finally, the potential for high returns. Momentum stocks tend to deliver higher returns during bullish phases, and this fund aims to capture that upside. So these are some of the major advantages of investing in this fund. So now let us take a look at the disadvantages of investing in this fund, because these disadvantages provide us with the potential risk we might be undertaking. It reveals the potential risk we might be undertaking. So here are some potential downsides. One of the major drawbacks is the higher volatility. So momentum investing can be a double-edged sword. While it can deliver higher returns during bull market, it can also lead to steep losses during market downturn. Then there is another drawback called sectoral concentration risk. So since this fund selects stocks based on momentum, it could end up being overweight in certain sectors that are performing well, leading to sectoral concentration risk. And another drawback is chasing the performance. So momentum strategies tend to chase recent winners, which can sometimes mean buying stocks that are overvalued and ripe for correction. Finally, another drawback here is the lack of downside protection. So this fund doesn't actively manage risk or seek to protect capital during market decline. If momentum fades, the fund's performance could also suffer. So these are some of the drawbacks of this fund. So you need to carefully consider the potential advantages and the potential drawbacks to consider whether investing in this will be suitable for your investment portfolio or not. So finally, what is the final takeaway from our analysis? Is investing in the Motilal Oswal Nifty 500 Momentum 50 Index Fund worth it or not in the long run? As we can see from our analysis of the pros and cons, that we can see this fund offers a compelling opportunity for investors looking to capitalize on the momentum driven stocks with the potential for high returns during bullish markets. However, it comes with higher volatility and sector concentration risk, making it more suitable for those with a high risk tolerance. While the fund benefits from a diversified and rule-based approach, it lacks downside protection, which can be a concern during market downturn. So overall, it can be a good fit for investors who believe in the momentum strategies and are comfortable with the associated risk. But however, always before choosing to invest in this fund or any other fund, always make sure the fund you're choosing to invest has the investment objective and the risk profile that aligns with your investment objective and your risk tolerance. So it's completely up to you as an investor to decide whether invest in this will be suitable for you or not, by considering what is your risk profile, your investment objective, and the time horizon for your investment goal. But still, our personal opinion is this fund can be suitable for an ultra conservative investor who's not willing to invest in actively managed funds by taking risks. But if you do still want to invest, there are similar index funds that has a lower expense ratio and a lower tracking error compared to this fund. So you can definitely invest in those index funds that has a lower expense ratio as well as a lower tracking error. And if you're willing to take at least a little bit of risk, or if you're willing to invest in actively managed funds have the potential to deliver higher returns than an index fund like this. So if you're willing to take a bit of risk, then you can definitely consider investing in actively managed funds as well. And especially if you're an investor who's looking for dynamic fund management and also for investments that can beat the market itself, actively managed funds might be more suitable for you, because as an index fund, it will only be able to replicate the performance of the index and only be able to match the index performance. It will not be able to dynamically change the fund allocation based on market conditions. Even if the market is performing high, even if a market crash happens, it will only try to replicate the index. And if you want to investments that can beat the market, it is not possible in an index fund, because as it only tries to replicate the index, the best it can do is it can try to match the index fund as perfectly as possible, but it cannot beat the index returns itself. So if you're looking for fund management or investment like this, then definitely consider investing in actively managed funds, because there is potential for higher returns comparing to an index fund than this. And so finally, before choosing to invest in any investment, if you're still struggling whether it will be suitable for you or not, you can definitely invest through a professional guidance as well. Like in consulting with a certified financial planner will help you to find out the suitability of this fund's investment objective, risk profile, overlap ratio, allocation between your investment portfolio and the investment portfolio of the fund you choose to invest in. So they will be able to look at all the factors and consider what will be more suitable for you and what will help you to achieve your financial goals in a more faster and smarter way in the long run. Definitely consider investing through professional guidance as well for a better financial financial future.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.